And I started with Esh after I retired from a paying job and been a volunteer ever since. When I joined Esh, they told me I should look at Esh as a second career. And I said, I do not want a second career. And then they said, well, okay, just see what happens. So now 20 years later, I'm still here. And the main reason is that I enjoy what I'm doing. I enjoy the work, I enjoy the people, and think I'm doing some good as best I can. So this morning, we're going to talk about starting up a nonprofit and then how to operate it successfully. Now, I am the executive director of ASH, the Executive Service Corps of Houston. And we provide a lot of services for the nonprofit community. Let me bring up my slide presentation. Sure. Okay. I assume everybody can see this. Get started. So just a little bit about ASH so you know where we're coming from. ASH was started in 1984, so we've been doing this type of work for over 40 years. And our intent is to help nonprofits achieve their goals. We've partnered with probably 4,000 nonprofits by now, offering no cost or low cost webinars, workshops, consulting, expanding nonprofits' capacity to achieve sustainability. We have a group of volunteers who are all our consultants, I should say, are volunteers, so they don't get paid for what they do. We kind of have an ongoing relationship, which brings donors and sponsors to ASH and nonprofits to ASH to basically provide a service to what we used to say was the greater Houston community. But ever since COVID and everything we've done, or most of what we do is virtual now, we provide our services throughout Texas. We are the only executive service corps in Texas. And there are approximately 15 other service corps around the country. And each one is a standalone 501c3 nonprofit. But we do have coordination and we regularly meet and exchange information, try to help each other wherever we can. So we've been operating initially in 6 counties. Our nonprofit client, this is should be 40 years now and much more than that. And our consultant role is about 30. I would say that maybe half of those do all the work, but we can call on experts in various fields from time to time as we need them. And the types of clients that we serve are all over the gamut. This is client organizations by NTEE coding. This is an IRS categorization where they identify nonprofits in different categories so they know where most of the nonprofits are. And our client organizations run from the very large. We have some clients that have or affect over 10,000 people. And most of them are in the smaller category. We consider our niche somewhere up between 1 and 500 people. We do work the whole gamut, but most of our clients come in the smaller category. And we provide management training, troubleshooting for nonprofits. We do a lot of mentoring these days. Most people who are trying to start nonprofits have a lot of questions about the startup process. And actually we encourage people who want to start nonprofits to talk to us before they start the process of actually doing the filings, because there are some specific things they should be aware of. It's not that difficult, but there are some potential traps if you don't know where you're going, and it can cost you some money before you realize that you may be having a problem. The types of services we offer, organizational assessment, board governance, board development. We do all sorts of planning. We're great at planning. So any subject you want to plan about, come to us and we'll help you do the planning. We do human resources work, and we do a lot of IT work. We have a joint venture or collaboration with the University of Houston Business School, where there's a professor there who teaches a course in how to do nonprofit projects, so project management of IT projects. The students are all very knowledgeable in the technology of IT, but they don't have much practical experience in running projects. So we bring our nonprofit clients to them, and the students form teams and they do projects for the nonprofits. It started out mainly websites and databases, but it's been expanding year after year to where they're doing all sorts of IT work, including social media, and of course, recently getting into AI. Now, we do have a nonprofit startup program. We used to do an hour presentation every week on nonprofit startup, but the attendance has dropped off quite a bit. So we're now doing it once a month. And if you're interested in more details on the startup process, you can go to our website and see when the next session is there and attend it. Okay, so now we get into the meat of the presentation. First is nonprofits are different from for-profits. And how are they different? Well, nonprofits have a community service motive. So then they haven't been formed to make a profit. Now, that doesn't mean they shouldn't make a profit in the sense that they have more money coming in a year than going out, because they need to pay for the work that they do. They have all sorts of expenses, and we'll get into a bunch of that as we go on. But the purpose is not to make money. Certainly no money can, even money made by a nonprofit, none of it can go back to the founders or the board members. It's got to be put back into the organization. There are some restrictions on how much you can pay yourself if you're getting into a nonprofit. Now, these restrictions are not legal restrictions. It's just that your donors, mainly foundations and corporations and individuals, they don't like to give you money to pay salaries. They like to give you money to run your programs and help the people that need the help. So they understand that a certain amount of money needs to be spent in hiring people and paying people, but they don't like to see a big part of it going to that. They want to see it going to the programs. Nonprofits are more expensive to form and complicated in the sense that you have to fill out forms. There's basically a state filing to get you a nonprofit corporate status. And then once that's done, then you file with the IRS to get the tax exempt status or 501c designation. You also have greater reporting requirements for a nonprofit. The IRS requires that you report once a year to them if your total income is less than $50,000 in a year. You have to just identify that you're still in existence. So there's a separate form to fill out for those whose incomes are less than 50,000. And then as you get between 50,000 and 200,000, you have to do a more detailed filing. And you can do it online, but it involves giving them some of your financial data so they can, if they want to look at it, they can. And then if your income is over 200,000, there's a 990 form, it's called, which asks for a lot of information on all your financials. So you have to do that reporting. The state doesn't normally require information on a regular basis. They can ask for information. And usually you don't have to submit anything to the state unless they specifically ask for it. There are more regulations and additional functions with a nonprofit. A lot of it, since the government is giving you a tax-free status, they want to make sure you don't get into conflicts of interest, and certainly not into campaigning for people running for office. You can advocate policies, but you cannot support specific individuals in elections. Now, this says a higher failure rate. I personally think that it's not really higher than the nonprofit. Nonprofit world has a pretty high failure rate. The for-profit world has a pretty high failure rate, and we're talking about maybe 50% failure after 3 years. They do the IRS in particular requires you to file this 990 form for reporting that you're either still in existence or that you have some financial information to report. And if you don't report for this 990 for 3 years in a row, they automatically rescind it. So you no longer have the tax-free status. Okay. So the first step, as I mentioned, is to file with the Secretary of State. And this is in Texas, and it's pretty much the same in any state. In Texas, the state charges you $25 to file. You get a certificate of formation for a nonprofit corporation. It means that the state now recognizes you as a nonprofit corporation. And to do that, you need a unique name. In other words, that make sure that somebody else is not using that name or something very similar to it. And you can check that through the Secretary of State's website. You can do a name check, and you just put in the name you want to use, and it'll come up and tell you all those names that are similar. And so you can make a judgment whether you want to try to proceed with that name or change the name. You also, when you do the application, you need the names of 3 people who will be board members. Now, these can be any people. They don't even have to be in Houston. They don't have to be in Texas. They don't even have to be in the US. But they have to be 3 adult persons, and you have to give their names. You don't have to give it any title to them except director, and an address for them, but you can use the same organization address if you want to. You don't have to give them personal addresses. When you make the filing, you need to indicate an individual or an entity as being your registered agent, and that is you're either somebody on your board or an organization. They have commercial organizations that will do that for a fee. I personally would recommend you just pick one of your board members to be a registered agent. There's no need to pay a fee to somebody else to be a registered agent, because, as I said, the chances of you getting any correspondence from the state are almost nil. But you do need a physical address for the registered agent, and that's all to be filled out on the form. And if you change the registered agent or you change the address, you have to advise the state, because they have to know who they can contact and where they can contact them. Then the last two items on here are exemption from sales tax and property tax. And usually you wait until you get your IRS approval and then go back to the state. When you go back to the state, you go back to the controller's office, not the Secretary of State, but the controller's office, who is the one that handles taxes. And there's a form to fill out requesting exemption from these taxes, and you just fill it out, and it's on essentially automatic to get it. There's no fee to file for the exemptions. Okay, so then once you've got the certificate of formation, and that you can get that within a couple of days at most from the state. If there's a problem and it takes longer than that, then we always advise that you contact the Secretary of State's office and find out what the problem is. Sometimes it's just an internal problem they have. Sometimes they have a question on the form that they're eventually going to get in touch with you. But if you don't hear back from them in a couple of days, I advise going back, just calling them on the phone, and there's a telephone number on the application form to call to, and you can find out what's happening. So when that is done, then you're ready to file with the IRS. So the first step in filing with the IRS is to get an EIN, an employer identification number. And that's done very easily. You go to the IRS website, you search for EIN, employer identification number. You do this. This is the same process for profit as for a nonprofit. For any corporation, this is the process you go through. So you fill out the application online, and by return email they give you an EIN. Doesn't cost anything, and you get that. Now that EIN is your identification to the IRS. On all future communications, you will have to give them your EIN, because that's how they recognize and look up your file. They don't care about your name really, but they need to have that EIN. Also, once you have the EIN, you actually can open a bank account. Now that has nothing to do with the IRS. You just go to a local bank, and pretty much any bank. And with the IRS, the organization name, you do need a certificate of formation from the state, so that the bank knows that you're formed a corporation. And you may need a resolution from your board giving you authority to open the account, but that's all you need is the EIN, the certificate of formation, and pretty much any bank will accept you. Now, it's best to go with a bank you maybe have some experience with, or they know you. If a bank gives you problems on opening an account, then my recommendation is always go to another bank, because it shouldn't be a problem to do this. And you should have a bank account as soon as possible, because you want all your money flows to be through that account and not any personal account of yours or any board members, even though you're going to be probably putting up the money to go through all the applications and getting started. It's best if that money flows through an organization bank account. So always keep that in mind. So once you have the EIN, then you file what's called a Form 1023 or a 1023-EZ with the IRS. Now, these forms are done online. You cannot send a paper copy in. You have to do them online. And they're pretty straightforward. There are some pitfalls though, and we always recommend, if you have any questions about filling out those forms, just contact us and we'll help you through it. We can also file with you or help you to actually do the filing, or file for you. We have done that, and we charge a fee for doing that, but you can do it yourself. The 1023-EZ form is really easy. It's like 2.5 pages. And all you have to do there is go through something like a 30 question attachment that they have to the instructions for the 1023 Easy form on the IRS website and be able to answer no to all the questions. But the only significant question really is, how much money do you think the nonprofit is going to bring in each of the first 3 years, just 3 years? And if that is less than $50,000 a year, then you're eligible to file the 1023 Easy form. All the other questions are pretty simple and they mostly don't have much of an effect on what you're doing, and you should be able to answer no on all the other questions. But you need to do that. And the filing fee for the Easy form to the IRS is $275. Now, if you really feel that you're going to get income more than $50,000 in any of the first 3 years, then you should file the full 1023 form. And that form, you do that online also, but that will cost you $600 as a filing fee to the IRS. So what a lot of people say is, why should I pay $600 if I can pay $275 and I'll just file the Easy form? Well, when you file the Easy form, you check a box attesting to the fact that your best faith estimate is you're going to be under $50,000 income in each of the first 3 years. And if that is the case, then you should file the Easy form. Now, for people, you shouldn't file it just because you want to get away with filing a lower fee form or easier to fill out form, because the IRS, although the chances of them really auditing your form are very small, they do spot checks. So even if you fill out the form correctly, if there's an error on the form, they're probably going to catch it and come back to you and just ask you to correct the error. But they do spot checks where they may ask you for your financial estimates. So you should hopefully have done some sort of estimating as to what your financial income and outgo are going to be in each of the first 3 years. Now that can be done through a business plan or feasibility study. We'll get more into that later on. But hopefully before you apply, you should have gone through some sort of thought processes on what it's going to cost you to run this organization and how much money you're going to need to raise to run it. So in any case, if you're going to file the full 1023 form, that's about 12 pages long. And it's got a bunch of attachments if you happen to be in a special situation, if you're a school or a church or you're running a medical service or something, you may have to have an attachment. But for most nonprofits, you just fill out the main body of the form, which is about 12 pages. And as I said, it's not complicated, but typical of the IRS, they may ask you some questions on that form which are not very clear, and you may not understand what are they getting at. And again, if you have such questions, just contact us and we'll try to help you get through that. Now, if you file for either one of these, you need or you should have already done bylaws and a conflict of interest statement before you do any filing. Now, in the Easy form, you're just going to have to check a box saying that you have them. If you fill out the long form, you're actually going to have to send a copy of the bylaws to them. I don't think you have to send a copy of a conflict of interest statement, but you have to check a box saying that you have them. And if they do spot check and audit you, they may ask for the copy, in which case you don't want to have to start generating things in order to respond to the IRS. So you should already do these before you before you do the applications. Now, there are services that you can find online who will help you do both the state and the IRS filings. But I would advise you, you can look at them, see what they do for you, but they can cost you several $1,000s to have somebody else do the filings for you. Now, if you can get a pro bono person to file it at no charge, fine, that's great. And if you want to get assistance, actual assistance, rather than just asking questions, actual assistance in doing the filing, come to us and talk to us, because we do charge for it, but it's a nominal charge compared to what you would have to pay. It may be a few $100s versus a few $1,000s to go to one of the online organizations. Okay, so you do the filing. The response from the IRS, if you do the easy filing, you should get a response from them within 3 to 4 weeks. Relatively fast for IRS performance. If you do the long 1023 full filing, it might take you 3 to 4 months. And it depends on the workload. So if you're, if the IRS workload, so if you're in the tax season, then it may take longer to get your forms filled. But there's a place to check on the IRS website where they are in terms of them handling applications. So that's I think all I have to say on the applications. And if you have any questions on these, put it in the chat box or hold it till the end, and we'll come back and talk about them later. So running your nonprofit is not so easy. You need constantly raise money, unless you have some donors, wealthy donors, who want to give you a lot of money and turn you loose. But if you have paid staff, it's expensive. So if for example, if you're filing an EZ form, then I strongly suggest that you look at having volunteers working for the organization in the first 1 or 2 years, even 3 years, so that you don't have to pay them. They have volunteers. If you want to hire them, then you may get to exceed this 50,000 limit pretty fast. So you may want to still hire, and you can hire them part-time and keep the salary expenses relatively low. But if you start building up full-time staff, it's going to start costing you real money. Then you also, to attract these volunteers, you have to motivate them. And then you have to kind of, I don't like to say this, but stroke them so that they won't leave. Now, usually if a volunteer comes to assist you, they believe in your mission and they want to help you be successful. So it's not that all that hard maybe to attract them, because most nonprofits have missions that are motivating to the point of what are you doing for whom, and the volunteer will be thinking the same way. But once they're volunteering for you, you got to keep them motivated, because you don't have a salary control. You can't say, I'm going to cut your salary if you don't do this or that work. So if you want them to do work, you have to motivate them to make them want to do that work, because you don't want them to just get up and leave, which they can do as volunteers. So that's a problem. It's attracting and motivating volunteers. And then you should have proper financial controls. These should be defined in the bylaws, and you might have separate financial processes and procedures in addition to a whole bunch of other processes and procedures you might have to govern other things that you do. And then the conflict of interest statement is essential. It's going to, most nonprofits have at least their board members sign a conflict of interest statement every year. So it may be the same statement, and all they're signing is that they don't know of any existing conflicts. If there is a conflict, the conflict of interest statement should spell out how to address the conflict. Who's going to listen to the problem and rule on the problem, and so there should be a process in the conflict of interest statement. So these are some of the things that may cause nonprofit to have some difficulty in operating. Okay, this is just a general comment before you approach a donor. And we'll get into talking about fundraising as to who potentially are your donors, or where are you getting your money from. But before you approach a donor, you must clearly tell what useful service you provide, because that's what they're really supporting. Who are you benefiting? Your target clients. Why are you unique in providing this service? Because the funder has the option to give money to anybody if they want to fund a service. There may be a whole bunch of different organizations that provide similar service. So why are you unique? Why should they be looking at you and supporting you? And then how will you financially sustain the operations? Because funders don't want to be hooked for life, meaning as long as you need money, you think that they're there to help you. They want you to have other sources of funding besides the one you're applying to. And of course, this holds true for not depending on a single source for funding. And a typical one which has come up recently is the government. If you get government funding and then all of a sudden the government wants to stop supporting a program, you've had it. There's nothing you can do. And we had one client who was getting like $15 million a year on work training. And then the government, this is before the recent cutbacks. But the government decided that they were giving out money to too many work supporting organizations. They wanted to reduce the number. So rather than reduce the amount given to each one, they cut half of the organizations out of the program. And the one who was our client got cut from $15 million down to basically zero. They had to get money other places. And that's a big change to cut your staff and your programs to absorb that, and then slowly build it up with other funders. Okay, for a startup, we always recommend that you do a feasibility study. It's like a business plan, essentially the same components of a business plan, but we suggest you do it before you do the filings with the state and the IRS. So for a startup, you have the feasibility study, the registration, and then the forming of the initial board. One of the functions of this initial board, and you can change board members anytime. You don't have to go back to the IRS and the state tell them who you've changed to, because the IRS will see that if you do a 990 actual filing. You'll have to list your board members, but you don't have, when you change the board members, you don't have to advise the IRS. But in the first 1 or 2 years of operations, you don't have a track record. You're a new organization. You're just starting out. You're trying to build up your programs, so you don't have a track record. So it's going to be very hard to get a foundation, and foundations in particular, to support you financially. And that's why we say you should try to have a board where the board will contribute funds for at least the first 2 years. Now, you as the founder may have already accepted the fact that you are going to have to put money into it. But I think when you bring the rest of the board on, you should advise them so that they know what they're getting into, that they may have to come up with the money for the first couple of years, or you're just not going to do anything in the first couple of years. That may be you just use the first 2 years for planning everything you're going to do and not actually spend any money in doing it. But you'll see, if you don't have the money, you're going to be limited on what you can do. Okay, now as you progress and you're a young nonprofit organization, let's say in 3 to 5 years in operation, then we suggest you do a business plan where you focus on your accomplishments, because these are the things you're going to try to sell people on to support you. And not only funders, but um, volunteers, the general community. You want to get your name out there and your name known. So during this period, you want to have sound board governance so that the board will operate efficiently and they know what their functions are. Now, the board functions can vary when you're starting out during this young nonprofit stage. You may have board members actually doing program work for you. They've joined. They don't want to just sit around and meet every quarter or so and make some judgments on what you're doing, but they may actually get into operations. They may be functioning as maybe someone's the executive director before you want to hire somebody. They may be in administrative function. They may want to be the program director if you're doing an activity that requires somebody to manage a whole bunch of operations, and you want somebody from the board maybe doing that. So during this early or young nonprofits phase, the board may be, in addition to their regular board functions, they may also have operational functions. So during this period also, you'll be doing market research to identify the funding sources. Where do you think you're going to be able to get money? And not only sources like foundations and corporations, but you may be wanting to look at social enterprises, gift shops, thrift shops for reselling things. More and more people are looking at things like coffee shops, cafes. I was just telling Levy before that we've got a project right now with the Brookwood community in Brookshire to help them improve the operations of their gift shop and cafe, which are bringing $1 million a year. So it's a pretty big operation, but they're not making any money because they're a nonprofit, and they tend to spend or focus their operations and money on their mission and not making money. So we're going to try to help them on that. And then, the last item is creating a case statement, and this is for fundraising. I'll get more into it then later, what it would mean by case statement. And then they ask, how do you go about asking for funds? Okay, then the mature nonprofits who have been in operation, say, at least 5 years, then they should be considered doing a strategic plan. Now, this looks out at what they think is going to happen maybe over the next 5 years, and they build on their experiences from the past 5 years. So typically they do what they call a SWOT analysis, where you look at strengths and weaknesses, which reflect what has happened in the past, and then you look at opportunities and threats, SWOT, SWOT. So opportunities and threats look into the future. What do you anticipate may be your opportunities to move ahead, and threats, what may be occurring in the general economy or in your field of activity, which are going to maybe hurt what you're doing. So you can do a strategic plan at that stage, and that comes up with an execution plan, which includes board governance, but it has action steps that are measurable. So you don't want to have a general, well, you have a general step like improve programs to do so and so. That's a general statement. Then you'll have an action step, which will be a specific one, which will be like hire more personnel. And then you'll have who is going to be responsible for doing that, and when is it going to get done, what the schedule is. So that's all built into strategic plans as you have a more mature organization. So if you're doing the feasibility study, these are the components of it. The executive summary is the last thing you write, but you have mission, vision, values. And we typically support or work with organizations to do feasibility studies and cover all these aspects. And it's your plan. You do it. We don't just take a general statement from you, what your mission is, and go back to our office and write up a plan for you and give it to you. This is your plan. So we work with you. We kind of just guide you through developing it. And it's something we do quite a bit. So again, this is something hopefully you do it before you file with the state and the IRS. But if you wait until you've done the filing, we have a lot of clients who do the filing, then they come to us and they say, well, what do I do next? And that's why you have a plan. It's essentially a business plan that'll tell you, the feasibility plan also tell you what you do next. Okay, now I want to switch a little bit to board governance. Okay. So these are the things you should know about boards. First is a nonprofit has no owners or shareholders like a for-profit might have. So basically, you're owned by the community. You're a corporation, but you have no shareholders and no owners. And so that, secondly, there's no profits to distribute. As I mentioned before, you should really look in terms of ending the year having brought in more money than you sent out. But that money should not and cannot be distributed to the board members or to any so-called shareholders who might have an interest in what you're doing, but they don't have any ownership in it. Any surplus revenue and expenses stays in the business to help achieve the community service. Now, if you shut down a nonprofit, all of the assets, after you pay off all your debts and obligations, all of the assets must be given to another nonprofit. So there's no distribution to the founders or the board or anybody else. It has to go to another nonprofit if you close a nonprofit. And along that same, just as a point of interest in that is, if you personally donate something to the nonprofit, let's say a computer, or we had one case of a woman who said her mother has a small house that she'd like to donate to the nonprofit, but when she retires, she wants the house back. Well, that's the problem. If you donate something to a nonprofit, you can never get it back. So keep that in mind. If you're going to donate something to a nonprofit, that you don't anticipate you'll ever want it back. If you're going to want it back, then you can rent it to them. You can have a lease agreement or some sort of agreement which indicates that they can take it back at a certain point in time, but you cannot give it to them and then get it back. Now, the next item is a pretty important item that you should keep in mind, and that is that the board of directors has total authority, legal authority, and liability to obligations for the organization. The founder does not. And if the founder is involved in any way with the operation, if the board decides to remove the founder, they can do that. And there's nothing you can do. People have said, well, I write it into the bylaws that they can fire anybody but me. Well, legally, that has no standing. So the board has all the authority. So my recommendation always is that certainly when the beginning, when you have a relatively small board, make sure that the board likes you. So there's no potential problem there that they're going to kick you out. And we've had cases where founders have got into opposition with certain members of the board. And in one case, actually, the people who were objecting to the way the board was being run were able to build up a large enough number that they actually kicked the founding board out and formed a new board. But in other cases where they are threatening to take over the board, that the founder or some member of the board was able to get enough votes together that they kicked off the board those that were causing the problem. So you just have to remember that the board has all the authority. They also have legal responsibilities, which mean a bunch of things, and I don't know, well, if I don't get into it, I'll try to remember to bring it up later, but you need to have insurance to cover the board's liability. Say, this says they have legal responsibility, which means they can get sued. So we'll talk about that later. Okay, the nonprofit board sets direction, makes policy and strategy decisions, oversees and monitors performance, and ensures that the organization's public service mission is achieved. So they need to be informed. One of the key things from this series of steps is that you have to inform the board what's going on. And particularly, again, since they have legal liabilities for the performance of the organization, they need to know what's happening. And particularly where the biggest concern usually is money. If the board isn't aware of what's happening with the money, all of a sudden they find out one day that there's no money left. And what do? They're in a bind. So you have to keep them informed, and on a fairly regular basis. I would suggest that, in the beginning, maybe you want to have board meetings every month. And then as you have get more experience and more operations are directed down away from the board, you can extend it to once every quarter. But every time you have a board meeting, you should look at presenting the financial status to the board at that time. Board members have the legal responsibilities, duty of care. They have to make decisions that are informed and in good faith. Duty of loyalty, act in the best interests of the organization, avoid conflicts of interest. Now that, conflict of interest is interesting because just because there's a conflict of interest doesn't mean that's illegal or shouldn't happen. If for example, somebody on the board is an accountant and the organization needs to hire an accountant to do their books, you would think that asking the board member to do it and paying them to do it would be a conflict of interest, and it is. But the board can decide that that's an acceptable conflict of interest. If the board member will charge a price, hopefully do it pro bono, but if they charge a price which is lower than the going market price for accountants, the board may decide that's the best way to do it. So there's a conflict of interest which is acceptable. So it's not always bad to have a conflict of interest, but if there is one, the board should know about it and then they should address it. Then the duty of obedience, be true to and support the organization's mission, bylaws, policies, and other rules governing board behavior. So I think we looked at some of these before: board responsibilities, mission, and vision. and you really should look at the mission every few years to see that it hasn't changed. Most of the times it doesn't change. Support and evaluate the executive director. Particularly if you've got a paid executive director, you want to make sure that you evaluate performance and set goals. When you're doing the evaluation, set goals. Ensure effective planning, monitor the programs, ensure adequate financial resources, protect assets. This is don't take exceptional risk with your assets. For example, an example there is if you have an endowment. Supposing you're lucky enough that somebody on your board or somebody you know is willing to give you a chunk of money as an endowment, meaning it's in most cases, the endowment is used if you've got a real urgent financial situation where you need the money. But most cases, you leave the money deposited somewhere, and then you use the income from that endowment to support the operations of the organization. Now, if you do that, then the question is, how do you invest the money? So there are organizations that will and nonprofit organizations that will handle the money for you at a certain cost, and they will allow you to select what kind of risk you want, and they will manage within that risk. So the board has to decide if you don't want any risk, then that money is going to be put in fixed assets, bonds, etc., and where there's very little risk to it, and that's what you live with. If you're willing to take more risk, you can let the endowment invest in stocks, but keep it under control. But anyway, you got to manage the risk. Ensure legal and ethical integrity. Enhance the organization's public standing, and then you got to build an effective board. You got to be able. They have to be able to sustain themselves and get replacements as people leave the board. Board composition. You hope that you'll have a variety of expertise. Now, you can always go out and contract for expertise, but if you've got various expertise on your board, then you can get it either for free or lower prices. And you need it also, you need a variety of expertise so that you can oversee things that are happening within the organization. And the typical one is your treasurer should have somebody with financial experience so that they can look at the financial statements and see if there's some problem with it. And then you might have somebody who has fundraising experience who can advise and help on fundraising, et cetera. So you want to have variety of expertise. You want to have a high level of commitment. And we always recommend that you have a commitment letter that the board signs every year. And in that letter, it's just basically says that they will do everything they can to advance the organization's goals and support the organization. And in many organizations, they actually put in a money commitment to the board members, commit that they will give or get a certain amount of money a year. And I personally think it's an important thing to have. The level of the commitment depends on what you think the board can afford, but it's very, very good to be able to show, particularly to foundations, that you have 100% of your board members who financially contribute to the organization. So that's the main purpose. We actually have a commitment in ASH on our board. Our level is $1,000 a year because we feel our board members can't afford that. One year we had a board member who was actually a lawyer with a fairly good sized law firm who said he personally was in financial trouble and he couldn't contribute that year. So the rest of the board got together and we raised about $3 each, and we put $15 into into an organization in his name. So he could say we had 100% board contribution. So it's just something to consider when you have it. The board must learn about the organization and address its issues. That's important because you want them to know what's going on and why you're doing things. And if they have other experiences in the work they do, they may be employed, but they may have been retired from corporations, and their experiences may be very useful in the way the nonprofit operates. And then prepare for and attend all scheduled board meetings and committee meetings. The bylaws will define what committees you have, and you can always create committees as you go along, but the bylaws will probably indicate what standing committees there are. An effective board ensures that the work of the board is allocated to smaller focus groups with special expertise. These are usually the standing committees, nominations and governance committee, finance audit committee, compensation, staff development committee, and fundraising committee. You don't need to have all of these, and you may want to have some others, but these are typically what the standing committees are. Another committee, which is, I bring it up because I just had a case where it came up with a client, and that is you can create an advisory committee, which would be people who want to be able to give their input and be associated with the organization, but they don't want to have the liability of being on the board. And you may want them around for information for purposes. There may be a professor at the university who specializes in the type of work you do. And so this council would have no board obligations, but they would be available really to assist the board when the board asks for assistance. And what happens frequently is that you have a board member who's may not even be interested in the annual commitment, but you want to have their input because they're very knowledgeable. So you can put them on the advisory council or advisory committee so that they can participate and give you the benefit of their knowledge, but they don't have to be subject to all the requirements of the board members. I had one client one time that had 51 board members. And I said, well, that's ridiculous. How can you operate a board with 51 members? You got to reduce the numbers. So for all those people who want to be associated with the organization, but don't really want to work at it, put them on an advisory committee. So they went back and considered it and came back and said, no, they want 51 board members because every one of them committed to give them money. So that's why they wanted the 51. If they put them on advisory committee, they wouldn't get that commitment. Okay, anyway, realistic fundraising plan is tied to the spending budget. And that in most cases is what you do, that you project your spending budget first, and then you figure out how much money you need. A lot of organizations say, well, I'm just going to go out and raise as much money as I can, and then I'll adjust my programs to meet that budget, to meet the funds that come in. But I think that's the wrong way to do it. You need to do the budget first so you know how much money you want to spend for whatever programs you have, and then you go out and try to get the money to cover that. You need strong internal controls and accurate financial reporting. That's a priority. You have to be able to evaluate programs and services. That's pretty high priority also. And the board participates with the staff in the strategic planning. Once you get to that point, usually the plans you can move them out 3 to 5 years. But what happens when you're doing a 3 to 5 year plan is that you really know what you're going to do the first year. But when you start looking at the second and third year, it becomes a little more hazy. You're just guessing. And certainly, and this is true in most cases, but except when you're going for a capital campaign. If you're trying to raise money to build something, you want to raise capital. A capital campaign may be a five-year campaign. So you may have detailed knowledge of what you're going to do for 5 years. But in most cases, when it's you're just doing your normal programming and maybe expanding your programs, uh, then the first year is the most accurate, and then it kind of gets hazy after that. Okay, financial management. How are we doing on time? Okay. Financial management, these are the things we're going to be talking about. Financial roles. Is there a clear understanding of the financial management related responsibilities of the board, the executive director, and the staff? Has the board established a treasurer position? It's always good to have a treasurer. You don't need to have a treasurer, but the treasurer, if the treasurer has financial experience, they're good to be there to give extra added eyesight on what's happening with the financials. The board, in fact, should get some training if they don't have it on financial management. Has the board established a finance and or audit committee? Finance committee is usually run by the treasurer. And they look at the finances and decide if everything looks okay, and if not, what needs to be brought up to the board for discussion by the board. Audit committee, this really depends on the finance committee should recommend the audit or the auditor if you're going to do an audit. Audits are very expensive. And if you're a small organization, we suggest that you downgrade that. You can do an audit, or you can do a financial evaluation, which is done by the same organization that's a third party outside CPA firm. But if you do a financial review, it costs you much less, because if you do a true audit, then the CPA firm that's doing it puts their reputation and legal position on the line. So to protect themselves, they charge more money. If you do a financial review, they don't put their reputation on the line. They do the same job, but it costs less. And if it's really small, you don't need either one. And if you go to a foundation and they say they want to see your audit, it's always advisable, if you're small, to go back to them and say, will the 990 form suffice? And usually it will. So they don't want you to spend your money on an audit when you should be spending the money on a program service. So determine why you need an audit and if you really need it. In some cases, the board may feel that there's something going on with the finances that they're not happy with, and they want to do an audit just for their own assurances. Do the individuals that have been assigned financial management responsibilities have the appropriate level of financial expertise? That's a question to ask. Cash management. I have found, certainly as an executive director, that the best way to manage my budgets is by knowing the cash flow. Now, in some senses, it's against policy. If you look at the official accounting procedures, they like to look at accrued costs and liabilities, which may not affect your cash flow. If somebody promises to you that they're going to give you money, in the accounting process, that will be put in as income. In the cash management process, that will not be put in as cash in the cash flow, because the cash flow management is what's happening to the actual cash. And if you're running an organization day to day, you need to know how much cash you have available and what your costs are going to be in the next month or so that you can manage the cash. So you should have monthly cash flow projections and update them. You should have a policy on how much operating reserves you should have. One of the problems with nonprofits is the income that you get may vary during the year. Most people who donate to nonprofits like to do it towards the end of the year. So you get a lot of money coming in the end of the year, but you have your expenses, which are fairly level month to month. So you need to have money available to pay those expenses. In order, the way to do that is to make sure that at the end of the year, you have enough money in the bank so that it'll cover you through the early months of the year when your donation level may be pretty low. Typically, people say 6 months cash reserve. That sounds a little high. I think you just have to have money available and you'll see what you need. If you don't need that much, then you don't have to have that much available at the end of the year. If you need it, then you just have to set it up and manage it. Then has the organization considered what adjustments in expenses might have to be made if significant grant or donation review is not received on a timely basis? As we mentioned before about the donors cutting you off. You just have to be aware that you have to have some flexibility in that. Does the organization utilize accounting software that is tailored for a nonprofit? Usually, if you're just starting and you're real small, you can do your finances on a spreadsheet. As you get bigger, typically people use QuickBooks. There's a QuickBooks for nonprofits. You can do that online. You may not need to hire an accountant. Bookkeeper may be adequate. You just have to see how much detail you're getting into. Does an accounting procedure and policy manual exist that is reviewed annually and revised as needed? You should have a financial policies and procedures manual. We do have some standard procedures we can make available to organizations. Oops. Is the chart of accounts structured to capture the necessary breakdown of revenues and expenses by category, restricted versus unrestricted incomes, functional versus natural? Or we can help on setting up chart of accounts if need be. Internal controls, system of policies, procedures, practices designed to provide reasonable assurance that the accounting and financial reporting will be timely and accurate. Assets and records will be safeguarded. Organization will maintain compliance with applicable laws and regulations. You must have adequate internal controls and make sure that they are implemented. This refers to who opens the mail, who can deposit checks, who can authorize payments. That's all in the financial policies and procedures. And you should have a certain level of segregation of duties regarding handling of cash, bank reconciliations, payment of vendor invoices, etc. The problem comes in with if you're a really small organization, you don't have enough people to really segregate these. So you want to do as much segregation as you can so that you don't get one person doing everything so that they can manipulate without you knowing what's going on. Has the board authorized an annual financial review or audit to be conducted by an independent CPA? I've already talked about that. Financial planning by budgeting. Does the financial plan support the effective and efficient accomplishment of the organization's mission? Is the financial plan realistic and achievable? Have you considered best and worst case scenarios? Is the annual budget prepared with projections of all sources of revenue, as well as expenses for all programs, management and fundraising activities? Is the annual budget broken down by month? Is there an actual versus budget comparison done on a monthly basis or quarterly basis at least, including discussions of possible corrective actions required? So it's just a lot of work you have to do in the financial planning area. Financial reporting compliance, monthly statements of financial position, which is P&L, cash flows prepared on a timely basis, reviewed by the ED and the board. You have to file this 990. Usually it's due in May 15th. You can get, and very easy to get an extension to, I think, November 15th. It's the organization's financial reporting and compliance with latest FASB updates, but this you need an accountant really to tell you that. Financial operations analysis. Is there an analysis of operating and financial results done each month? Is a historical trend analysis done to identify positive or negative directional changes? Some of this can be done. It doesn't have to be done all the time. It depends on how big you are and how much money you have that you have to follow. Evaluate the systems used to measure and report the impact of each of the organization's programs and services that can be used to support future grant donation requests. So this is the impact report. You're spending this money, you're doing these programs. Well, what kind of impact are you having? In some cases, it's pretty hard to evaluate. In some cases, it may be easy. In our case, for example, as a consulting organization, we don't really impact individuals. We impact organizations. So when we do our annual impact report, we look at the different organizations that we work with, and we look at how many people they impact, and then we all add them all up, and that becomes our annual impact report. Is the executive director and board receiving performance measurement data, key performance indices, KPIs, each month that provide the big picture in terms of the organization's ability to achieve its mission? Okay, now we switch gears a little bit to go to fundraising. It's a continuous process, begins with categorizing your donors, individuals, legacy, meaning after death, corporations, foundations, government. This is donors, and it's not, we didn't include in here things like you can sell things. If you sell things, you have to charge. If it's more than just a insignificant amount, you have to charge tax and submit it to the state. You do not, as a nonprofit, once you get the exemption from the state, you do not have to pay taxes when you buy things. But if you sell things, you have to collect the tax officially. And again, as I said, if it's just a small amount, you can just ignore it. So you can sell things. You can have gift shops or thrift stores or businesses where you sell things. A social enterprise, they call it, which is in addition to straight donations. Identifying the ask. Are you going for a capital campaign? You want to build something? You want to raise money for that? You want money for programs that you use, or do you want the program for overhead? Most organizations that give funds for programs allow you to include a certain percentage for overheads. But if you're in an overhead organization like we are, where almost all our expenses are overhead expenses, we have to go and ask for overhead. And that's probably more difficult than in other cases. You have to build a good case statement. In other words, you got to, and I'll go through with that, what that means. But you're basically selling yourself in terms of what your capabilities are and what your experience has been, your success stories in the case statement. Market research to identify donors who you can who you think would be the best people to approach, and have a good database to track activities. This is fundraising activities, contacting donors, submitting applications, providing reports, thanking donors, etc. Now, one thing I should say, because I've done this recently, you can go into AI and just ask them for a fundraising plan and see what they come up with. And this is what they're going to come up with, which is pretty good. And you can add to it or delete it, but it's certainly it's something AI can do. And what I haven't done and which I will plan to do soon is market research to identify donors. If I go into one of the AI programs and I say, here is the mission of my organization. Who can I go to particularly in foundations? Which foundations can I go to ask for funding for my mission? And just see what they turn out. I think it's going to be pretty interesting. And I mean, it's something I've been thinking about, but I think I got to do it to see how it looks like. So the case statement, what do you do, which is your mission and your target market, who are you trying to help, how you do it, programs, financials, board composition, your accomplishments and impact, the numbers of people you've helped, the success stories that you have, your vision for the future and future plans, and then specific, what are you asking for? Are you asking for X number of dollars for supporting a particular program for the next year? Something specific as to what you're going to use the money for. And the market research you can do in the library or in the internet. GuideStar I've always used that one. That's pretty good. And they've now consolidated with an organization called Candid. Candid is an organization that runs a foundation directory, which is something you have to pay for if you want to use. But it lists all of the foundations in the US with all the data in terms of what kind of organizations they give to, and what areas of the country do they give it, and how much do they give. But it is something you have to pay to get access to. Now, they used to have a program where you could pay a fee for a month. And that was a low, it was like $100 for a month. And I used it once and I got everything I could out of it in a month. And then I didn't have to renew it. But now I think you have to take it for a year. So it can cost, I forget what it is, $1,000 or so to access it. Now, it used to be that the United Way provided access to the financial directory. The foundation directory, like once a month, if you go to the United Way office and sit there and use a computer at the office. I do not know whether they still do that or not, but you can always check by going to United Way's website. And you can go to grants.gov to see what the government is offering. And then you can, if you have the names of foundations, you can always go to their websites. More and more foundations are actually requiring you to be asked to submit a application. They're not just giving you an application that you can submit, but you have to apply to them first, and they have to give you permission to ask. But it's not an easy process, but it's important to be able to get who the foundations are that you want to go to. Fundraising strategies for individuals, website, email, social media, membership. You can have membership to your organization if you want to. And membership, you can have a membership without it being a membership organization. Most nonprofits function best as a board directed rather than a membership organization where the members actually make all the major decisions. The membership organizations are more typically the churches and civic groups, but most nonprofits operate best as board directed. But you can, like museums do, you can have a membership where people become members, pay a fee to become a member of your organization, but they have no authority to authorize anything within the organization. Okay, corporations, you can have events where you invite corporations to attend. You can invite them to join your board or have a representative on your board. or to support specific programs. And then foundations and government, they need to be able to do research to see which foundations offer support in your area. And then you have to be able to write grants. If you're going to hire a grant writer and pay them, it's not, again, not illegal, but it's frowned upon to hire a grant writer and pay them a percentage of what they get in grants. As I said, it's not illegal, but if you go to the Association of Fundraising Professionals website, they tell you that it's frowned upon. That's then left up to you to decide. The other thing about grant writers, you can go to this Association of Fundraising Professionals to get sources of grant writers. There is a professional grant writers association in Houston you can go to. Just warn you that do not pay them up front. Agree on a fixed amount of money, but don't give them any money up front because they have a tendency to write grants which are maybe garbage and then disappear. So you don't want to get caught up in any of that stuff. Whoops. What happened there? Was that the last slide? Oh, no, this is the last. This is the last slide. This is just how ISH can help. We can do work with you on organizational assessment. And we have a tool to do that, which we can let you do it, to do your own assessment. And you can come back 6 months or a year later to see if your assessment has moved you to a better position. We do board governance. We have a board governance webinar that we can present to your board. We do have a general one that we do on Zoom several times a year. Strategic planning, the same way. We can do that with you. We do have a webinar on that. Same with financial fitness. Cloud computing, we have a webinar on cloud computing, which we will be doing this year. And then we can, if you want to join our program to work with the U of H Business School, we can work databases and websites and other IT areas. And then there are other things to do. We're doing more and more mentoring these days. If people just call and ask questions, we will answer them. There's no charge for that. We don't have a formalized mentoring program. We can, if somebody wants to get us to commit to mentoring, we can structure it with a fee, but in general, we're available to answer questions. If you want us to work with you on a specific defined scope of work, we can usually put a cost basis on it. Our costs are not very high, and they're basically structured to keep you with a skin in the game so that you'll contribute to doing whatever the project is. But if it's just general without defining a scope, we don't charge for that. So you'll be getting a copy of these slides. The recording will be on YouTube, and Levi will let you know how to access that. And you can access us through our website with any questions. And we also have a request for assistance form if you want some more concentrated discussion on anything in particular for your organization. So with that, I'll open it up to look at any of the questions you may have. If we close this and open this, close this. Okay. Stop the sharing. So do we have questions?
Yes, good afternoon. Great. Thanks you for the presentation. It answered most of my questions, actually. So it was pretty comprehensive. I'm definitely interested in the mentoring. Totally new to nonprofits, and I really would appreciate an organization such as Ish to kind of help me walk through things.
Suggest you submit a request for assistance form, and we'll have somebody contact you and talk to you about what your needs are.
Is that through the website?
Yep. On the website, there's a request for assistance form.
I'll also post the link that will send you directly to that submission once I get the video uploaded.
Okay, great. Thank you.
Any other questions? More questions on the presentations?
No, I can hold my questions until I complete the request of assistance form.
Okay.
Cool. If there's no more questions, that concludes our webinar for today. Thank you for joining us, and please be on the lookout for the email I will send.
Thank you very much.
Do you have any questions, Sarah?
No, that was awesome. I'm at a conference in Las Vegas. Thank you so
Oh.
much for letting me be a part of it.
Oh,
It was
okay.
really good, really good.
Very thorough.
Very thorough.
Yeah.
Well,
Okay. How many people did we have eventually? Levy, do you know, that came in?
9.
Oh,
Right.
nice. Beautiful.
Yeah, that was about 50% of those that signed up.
That was
Okay.
good. Thank
Okay,
you, guys.
Thank you all.
All right. Thank you.
Thank
Bye-bye.
you. Have a great day.
You too.
You too. Bye-bye.
Bye-bye.